Hello guys, good morning to you all, and it's good to have you here again. Welcome to Profit Point Global Trading Services. This is Tolu Olugui, popularly known as TFX. This morning I want to share something powerful on gold, chart analysis and trading for the upcoming week, May, the second week of May 2020. Right from May 18th, 2020, and this is going to be powerful if you pay attention to this. Before I continue, I want us to understand that this video can be, an insight can be dropped directly into your mailbox. So if you want this video, things like this to drop in your mailbox, you want this analysis right on time, right on target, that you take advantage of it at the right time, please click the subscribe button right on this channel, and then also like our videos. We want to reiterate that Profit Point Global Trading Services, we are here to give values to people. We are here to give them values, and at the right time, that they can make maximum use of it, for benefits, right? Okay, as we know that there are a lot of massive opportunities in online trading, right? And then the only thing that make difference between people that are making profit and people that are not is right information and at the right time. All right, so let's get started today. There's something that I've been shipping out on XAUUSD, also known as gold, and then which I think this is going to be massive and important to share for our people. All right, in the month of early March, due to some shakings and economic disturbances as a result of coronavirus, we have gold, taking a very deep dive right this way. Okay, all right, which so to say is the biggest deep it has taken in the year. All right, however, this deep didn't last more than the month of March. So as we see from this golden line that I place here, gold started moving up. It gained its strength. Why? Because it's seen as a safe haven where people can invest their money in times of disturbance and all that, and it started appreciating. All right, quite a number of people invested their money here and they made money, and then it came down again, and then in the month of April you had this stronger bullish movement, and then it reversed again, and then we now have this kind of a sideways movement. However, in spite of this sideways movement, there is something that is shaping up, and it takes experience, right, of traders, like us, to see the pattern that is shaping up, and we feel we should share this to people. All right, and so what I want to explain, this pattern we are seeing here is something that professional traders, they know about, and that has to do with Elliott wave. So if you believe me, and then I know quite a number of good traders around the world, they agree with me that this pattern here is shaping out a kind of Elliott wave pattern that people can take advantage of. Unfortunately, if people don't know Elliott wave, they can't apply this. And unfortunately, again, some people know Elliott wave and they believe Elliott wave doesn't work, and so they quit it and say, okay, it doesn't work. Now let me emphasize something. All strategies, right, in FX works, but not all of them at the same time. I'm going to take that again. All strategy works, but not all strategies work at the same time. So you, as a professional trader, you have to look at the opportunity that presents itself, and then look at the strategy that fits into that, and then understand what the market makers are doing and take advantage of it. It's as simple as that. So presently now I want to expatiate and explain to people the shape that's been forming out, which I think, in my opinion, is Elliott wave, and it's been playing out because I've been observing this right from the beginning of April. and it's been wonderful. All right, let's get started. So we have here on the screen the basic Elliott wave pattern that every trader should know. All right, so I'm not going to go into the technicality of the Elliott wave pattern, but just go, because this application I'm just going to tell you what is shaping out and how to just apply that and make your money. You want to learn deep in depth about Elliott wave, there are a lot of courses and tutorials online, but with what I'm going to share, you're going to get what I'm talking about. Now, Elliott wave, it's just a count of wave patterns that present itself right in real life and in market analysis. So what happens is that we have this movement, and now listen please, I'm talking of Elliott wave pattern with respect to a bullish directional movement, right, as we have in this case of gold right now. This is a bullish movement, right? So I'm talking of Elliott wave in terms of this bullish movement. Elliott wave can also be applied in terms of bearish movement. So that's why we just take this for application purposes only. So we have this wave 1 right here, right? And then we have this wave 2 here, right? Impulsive wave, right? Right? We have this wave 1, impulsive wave 1, and then we have this pullback, right, with 2. We have this impulsive wave with 3, and we have this pullback with 4. We have this impulsive wave 5, right? And that is the 5 counts, right, presented in Elliott wave, right, for the impulsive movement. Immediately after this 5th level of the Elliott wave, we expect something called a correctional pattern, right? And then let's look at this second chart here. So we have this what I just explained here now, that this impulsive wave with 1 of course most of the time may not be as straight as this explained. This is just the basic. Now let's go in depth and see what comprises the fractals that you have in the impulsive wave. So you have the impulsive wave 1, which also comprises of several impulsive and pullback, impulsive pullback, right, to make wave 1. And then you have wave 2, right? And then you have wave 3, which is impulsive and then pullback, impulsive and pullback, that makes up wave 3. So you have wave 4, which is also a kind of a pullback, impulsive pullback, and all of that, right? And then you have wave 5. Is it clear? Okay, so now let's take another one that I want to share here. So if you now go deeper now you now see how this shapes out in real charts analysis for market conditions. So because I'm trying to build this up in modules, right, so that when I get back to the trading channel, the MT4, you understand perfectly in clear terms what I'm talking about. So we have wave 1, right? We have this pullback wave 2, we have wave 3, and then most school of thought have explained to us that wave 3 cannot be the shortest wave in the 5 level, right, of the Elliott wave count. So wave 3 cannot be the shortest. So if wave 3 is the shortest in what is shaping out, then you can as well not follow this Elliott wave. A lot of people don't know this, and so they say Elliott wave doesn't work. Wave 3 cannot be the shortest wave. So you can see here wave 3 is long, and we didn't say it cannot be the shortest, right? We didn't say it must be the longest, but it cannot be the shortest. So we have wave 4, and please look at this. Finally, we have wave 5. So after wave 5, what you expect is the correction before the bullish movement will continue, right? So the reason I'm saying this is this: a lot of traders right now are anticipating, all right, they're anticipating a lot of forecasts out there that gold is going to $1,800, right? That the price of gold is going to $1,800, right, per ounce of gold. And we believe that, but then we want people to trade in a way that is very scalable, and then they can make profits in the different movement, both up and down, a kind of swing directional movement there where you make money. So we believe it's going to $1,800, right, dollars, but then the way it goes to $1,800 is what we want you to understand. So right now I'm going to show to you now that gold right now is at the 5th level of the Elliott wave count, right, and it has taken the correction A, right, it has taken correction B, and we're expecting correction C before we now move and advance to that $1,800. Is that clear? Let me take that again. So I said it has taken correction A, right? It's at the 5th level of the Elliott wave counts. It has taken correction A, it has taken correction B, and we're expecting correction C before we are going to follow people into this $1,800 per ounce of gold. All right, so if we want to apply this right now back to the chart, let's get there. All right, so based on what we can see on the chart now, right, what we are saying is that there was a strong pullback in the month of March. So we have wave 1, right? We have wave 2, right? We have wave 3. As I said, this is long, it's not the shortest, right? If you compare this to wave 2, it's not the shortest. So right, so this makes it valid for us to apply Elliott wave here. So we have wave 3, we have wave 4, and we have here wave 5, right? And then it seems, as you know, a confirmation there that is stored at wave 5, which is around, you know, the highest level reached in April. So we had a pullback from that wave 5, a correctional pattern, correction A, right? Are we together? We have correction A, right? And then we now move to correction B, which is impulsive, correction A, which is pullback, correction B, which is impulsive, and I'm advocating that we're going to have a correction B or correction C, right? We have correction A, we have, you know, pullback, and correction B, which is impulsive, and we're advocating and expecting a correction C, right, which is another pullback, before we are now going to have these stronger movements or advance, right, into the 1800 that we are expecting, which is also going to be a stronger, you know, impulsive, which might and might not be a beginning of another, you know, wave count, right? I getting it? So what we're trying to say is that for people to trade with finesse, for people to trade with you know, right skills there, and to have, you know, the least amount of drawdowns and experience you know, profitability, we are saying that we're expecting a pullback here. And then let me reiterate this. Quite a number of people are bullish right now. They have several open buy positions, right, on gold. And then what we are trying to say now is that we are saying that if you take a buy position at this point, right, applying the right financial management, if you need to ask yourself, if the pullback wave C takes place, are you going to be able to stand it, right, with the kind of lot size that you open, or with the kind of financial management, right, risk reward ratio that you have put in place? So if you have a buy position here, there's nothing wrong taking a buy position here anticipating 1800, right, but then you should be prepared that if there's a pullback into this C region, then you can have a re-entry. Now we have to understand that this C, quote unquote, may not just be at this level, may come down as this level, may come down as this level, may be as small as this, but we're expecting the pullback, right, around here, pullback of wave C around here. So as a good trader, what I'm going to advocate is this, which is what I'm going to do right now. And as you can see, this is a real account here, and as you can see here, we're going to place an order here. And so if you have an entry at the present price now, which is broke yesterday 1730, so you can have a re-entry at a 1700 for us to rake in our profit towards the 1800 mark. I hope you have enjoyed this video, right? If you enjoy the video and you still want more to drop in your mailbox as we give different insights on gold, on crude oil, on currencies, pairs, and all that, you can hit the subscribe button. Welcome again to Profit Point Global Traders. This TFX. Thank you.